Good evening, and thank you for joining. We are live on Zoom. We are live on X, Twitter as well, and we are live on TikTok. Please, if you could just signify and let me know if you can hear me on all the platforms, please. I just want to be sure that you can hear me. The reason why we are doing, okay, I can see something on Zoom there that can show that they can hear me there live and clear. Thank you so much. Thank you so much for that. The reason why we are doing this on Zoom is because I wanted to be able to share my screen and let you know exactly, let you see exactly what I am seeing. And the link in Zoom is still fine. You can still join the link on Zoom. There are 37 people in there at the moment. I think we can go up to 100, and hopefully, I mean, this space is recorded on X. It will be recorded on TikTok as well, and it will be recorded on Zoom. So hopefully I can put that, I can put it, the recording on, I can put it online later on, and then we'll be able to benefit from it, because it is important that we are able to see exactly what I am doing. And that's why I have put this, this session on Zoom. Hopefully we'll be doing more of this from time to time, and we will be able to share as much knowledge as possible with each other. I'm just trying to get everything in order, and then we can make a start. Just a bit of ground rules for those on Zoom, please. Keep your mic mute so it can help us get through this thing as fast as we can. Because there is a lot to get through. This money issue, there is a lot to get through. So thank you so much for joining. It's already 3 minutes past 6 here in London, and I believe that's the same time in Lagos, Nigeria. The Americans will be on a different time zone depending on where they are. Thank you to everybody that has joined in. So I will just go on and share my screen. If you're on X and you want to see this on Zoom, there is a tweet I shared earlier, which I'll try to put in the Jumbotron now. You can just you could just use the link on that tweet, and then you can sign up on Zoom, and then you'll be able to watch my screen. Okay, I just shared that on the Jumbotron. You see the second image on that tweet is the image where you have the barcode. So if you scan the barcode, or if you copy that link, you'll be able to join on Zoom. Let me find one other tweet where I said, where I shared that as well. So I can put that on, and then we will just get going. There's a lot for us to cover, on this money matter. Very, very serious. Okay. Let me copy that link and then put it on the Twitter space. Paste. Someone said I'm not accepting. I am accepting. Let me check. Let me check again and see who is there. I'll be trying to accept as we go. Okay. Oh, wow. Okay. I admitted all. I've admitted all. So you should be fine now. Getting in. 66, 30 more to go. I think Zoom will stop us at 100. We are 80 now. 81, 82, 83. Okay. I wanted to get more space for the Zoom, but I was not sure if people was going to join in. So 19. So I didn't know if people were going to join in, hence my this. Maybe subsequent ones, I'll try and get the Zoom that has the bigger space. Because everybody wants money. I wanted to sign up to Zoom, and they said I had to pay a particular amount. And then if I wanted 400 or much more, I need to pay a particular amount. I was like, oh, okay. Let's see how it goes for the first few ones, and then we can now decide if we want to keep going. So we will make a start now. Thank you so much to everyone that has joined in. We are going to be going deep into a lot of finance and what to do with money, how to go about it. Oh, okay, I'm just admitting some more into the Zoom. Okay. We are 93 now. And after that, okay. Okay, thank you so much. I'll just bring up I'll bring up my slide up in Zoom, and then hopefully we'll make a start. You can hear me on Zoom. Thank you so much. Connecting from Mozambique. Thank you for joining us. 7 minutes. Let's make a start. Okay. Share screen. Which screen do I want to share? Screen 1, screen 2. Okay. So if you are on Zoom, please let me know if you can see my slide. Yes, you can see it. Thank you so much. Thank you so much.
I can see it.
Yes. Thank you so much for confirming that. Thank you so much. So we are going to make a start.
Yes, it's visible.
Thank you so much. Thank you. So please, if you could help us put the mic on mute so that the conversation can flow very well. Okay. So welcome to the Building Your Wealth by Investing in International Companies webinar. It's I think the capacity of the Zoom is filled actually. Oh my goodness, I could have probably done more then to accommodate more people, but subsequent ones will do more to accommodate more people. So we want to give ourselves as much information as possible in terms of investing in global companies, and how we could take advantage of those kind of opportunities. Okay, I'm trying to make the slide move. Okay, so a bit of introduction of myself. A lot of you know me by now. I'm Toyi Badewale Adelodu. I'm a civil engineer by trade. I do life coaching as well. I've been supporting a lot of young people in the last few years in terms of career, finance, and so many other things. A lot of these things I've learned by myself on the way, and I always refer people to, specialists in whichever field that they want to go in. Part of what has helped me over a long time is making mistakes, learning from them, and following people that have done the things that I plan to do, like looking for people that are experts in the field so that they could support me and help me get going. So everything that I learn, I share. And I try to make sure it comes at no cost to the person on the other side, because where I come from, how I grew up, things was extremely tough. Some people helped me along the way. So if I had to charge people, I'm still trying to see how that will work. But because of the way I got support, so this is actually my way of actually giving back as much information as I have learned. So you can find my handle, Twitter, Facebook, TikTok, Instagram. I recently started a YouTube channel as well. So this recording will also be on YouTube. And once the recording is available, I put it on YouTube so that you can catch up on it. There will be some podcasts I'll be doing from time to time now as well, with people that are doing amazing things that we want to learn from and grow from. So be on the lookout for that. So if you've not subscribed to the YouTube, please do subscribe. It will all be value. That's all I'm up for. Value, growth, development, and those are the things that will help us. So I've been working in UK construction for over a decade. and I've been helping young people, as I said, in different areas of life. So if we go into the matter quick enough, a brief introduction, the two important topics that impacts all of us. All of us will face this thing, whether we are interested in it or not. And that is your health and money. So whether you are interested in health or not, you get to a time where your health is going to fail you. No matter how strong you are, there will be a time where you are not as strong as you used to be. And as you grow older, the cost of your healthcare will increase. That will happen to you as a human being. And money as well. Whether you are interested in money or not, you have to spend money. You know, if you have children, you have to spend money. You have to spend money on yourself. You have to spend money on your family. So whether you are interested in money or not, it will affect you. So it's better you pay attention to those important topics. So personally, myself, I started talking about personal finance because some of the things that I found out, I couldn't keep them to myself. I couldn't just know those things and keep quiet. And I'll say a bit of a disclaimer here now. I am not a financial advisor. Everything I'm going to tell you is something that I have done a lot of research on myself. I will expect you to follow on that and do some research by yourself as well, so that you can get that deep knowledge that you are seeking. For me to be able to be at this stage, it took several years of reading several books of, like, I mean, if you're able to see my back here, it is always full of books, of people that have done really well. This is another one. Oh, you can't see it on Zoom. You'll see it on TikTok. The Little Book That Builds Wealth by Pat Dorsey. Pat Dorsey used to be like one very, very big asset manager, and he wrote those those are the things that I try to go into, because I saw that where I come from, I mean, I grew up in Mushin, Lagos, Nigeria, and I saw that those kind of discussions, we never have them. We never talk about them. Nobody tells us about money. Nobody tells us about assets. Nobody tells us about this kind of thing. So I felt it is a duty for me to go deep and understand this thing, so that we can share the knowledge amongst each other, and then we can grow. So as I was saying, I grew up in a very tough area. A lot of people know Mushin in Lagos, a very tough place to grow up in. And money was a big challenge when I was growing up. There was a time, I'm the first of four. There was a time I was the only one going to school. The rest of my siblings were at home because of financial challenges. I dropped out of school a couple of times as well. It was all money. And it wasn't because I was not smart. It was just because money was scarce. So it was important for me that when I started working, I wanted to know about money. I wanted to know, do some people know something about money that I don't know? And then I found out that they actually know quite a lot. So moving on to the next topic, time and money. We trade our time for money all the time. Like whenever you go to work for someone, you're going to give them your time, and then they will pay you some money for that time. So whatever you do with that money, that is now your business. What you're going to do with that money, some people have a percentage where they will say, let's say you spend 50% on yourself, you put 30% in investment, and people have different percentages of how to share what comes to you as income. But the primary thing we are talking about there is that you are using your time to earn money. That is what you do when you go to school, when you learn a trade, or things like that. But what I understood that the wealthiest people do most of the time is that they trade money for money. So rather than them using their time to earn money, they invest money to earn more money, thereby freeing up their time. There are several ways that you can do that, to be honest. If you build, okay, for example, let's talk about the guys that built WhatsApp, for example. When they built WhatsApp and Facebook bought WhatsApp, I can't remember how much now, for $19 billion. They created so much wealth that some of them don't need to work again because they built something that is that valuable to the marketplace. So a lot of us are in that stage where we are trading our time for money. And majority of us will have to trade our time for money, depending on what career path that we choose. Maybe you're a teacher, you're an engineer for so many years, you trade your time for money. So what is best, what people say that it is best for you to seek is this Japanese concept called ikigai, in such a way that you find a lot of joy in what you do, because you're going to spend most of your time at work anyways. So it is important for you to try and find a work where you find a lot of joy in what you do. Then you will not look like you are wasting time. So that is one thing on the side that's more about lifestyle. But today we are talking about money. So the wealthiest people in the world, they trade money for money. And how do they trade money for money? By investing, by holding assets that can generate cash flow over time, or assets that increase in value over time. So what are the type of asset, or what is an asset to start with? Simple definition, they say asset is something that puts money in your pocket. Liability is something that takes money out of your pocket. That's just in simple definition. So assets over time, they increase in value. So we have, if you take, looking at type of assets, for example, if we look at property, if we look at land, they are not making any more land anywhere. Even the one that they make by the ocean is trying to take it back. So if you understand those kind of things, property, land, you have gold, you have bonds, you have stocks, and you have cash. Cash is also an asset. So those are the kind of assets that are available. Crypto is an asset as well, but it's an industry that is very, very, very volatile. So you have to be very, very careful. If you don't understand what's going on there, don't go and put your money in those kind of assets. And each asset has got its own risk that is attached to it. Cash is risky. Every asset that you hold is very, very risky. So you have to understand the risk that is behind each asset as well. It brings me to a quote by one of my mentors that I read his book a lot, Jim Rohn, where he said that time is more valuable than money. You can get more money, but you cannot get more time. And that is very, very crucial, because whatever time we are planning, we are going to spend in the world, whatever time God has given us to spend in the world, that time does not increase or decrease. You are not getting any more extra time, but you can get more money. If you lose money today, you can make money tomorrow. You can be poor today and be extremely rich tomorrow. That is fine. But that time is very, very critical. So the rich are always trying to buy time. They are always trying to give themselves free time. That is why when you talk to a rich person and somebody is taking a flight that is going to take him 12 hours, maybe if he's trying to go to Lagos from London to Lagos, for example, he goes to Qatar, and from Qatar, he comes to Lagos. A rich person will be thinking, I don't want to waste 14 hours or 10 hours doing a 6-hour journey. Can something get me there in 3 hours, or something get me there in 2 hours? That is how the rich people think. And there is a group online now that they call FIRE. What that FIRE group is trying to do is that they are trying to buy their time. So what they do is that they try to reach out a particular amount of money called nest egg. So when they reach that nest egg, and they know that they can invest that nest egg in something that is going to give them a fixed amount every year, and they can keep their expenses within that fixed amount every year, then they don't have to work again. And they call them financial independence, retire early. You can watch some of their videos on YouTube and try and understand if that concept makes sense. Because they said, why would they be working for money if they can work very, very hard, make a lot of money, invest that money in a fixed asset? That fixed asset gives them some return every year, and that return is enough to cover their expenses. We'll get to that point as well. But that is how to think about money, not just going to work. What exactly is your plan? Because you are putting a good chunk of your life away to do this job. What exactly are you doing with that money that you are getting? Are you eating everything? Like the Yorubas, you say, don't eat with all your 10 fingers. Those are the kind of things we are going to try and unravel this afternoon. So time is much more valuable than money because we can get more money, but we cannot get any extra time. Okay, so we talked about type of assets earlier. We talked about stocks, we talked about bonds, we talked about real estate, we talked about gold is also a kind of asset. But cash is the most liquid kind of asset. Liquid in financial terms means that you can actually, like anything that can, what can get to cash fast is always the most liquid. You know, what you can turn to cash fast is very, very liquid. Real estate is a good asset, but it doesn't turn into cash very fast. So it is not liquid because you have to go through different documentations before you are able to sell your house. You can say you want to sell your house in January and not sell it until December. So that is why real estate, even though it's a good asset, but it is not the most liquid. Cash is your most liquid asset. But the big problem with cash is inflation, which we all know. You know, the price that you are buying bread last year is not the price that you are buying bread today. So that means there is an increase, a general increase in everything around you. If everything around you is increasing and your cash is not increasing, that means you are technically getting poorer. If you are spending £100 every month and your expenses are suddenly grown to 150, that means the £100 wealth that you had before, you are not as wealthy as you think you are because everything else is increasing around you. And you can see that thing play up at home now. I mean, home in Nigeria is that there are quite a lot of things that are increasing at a very, very big rate, but income is not increasing like that. So if that is happening, people will be moving below poverty because if the basic things are increasing, like food and all kinds of things, and the income is not moving, gradually, poverty is going to be choking people. So, and that goes to things that happen in different economies around the world. I mean, I moved here in 2008, and when I moved here, I think minimum wage was around £6 or something an hour, but now it is about £11. So as much as things are increasing, you also want wages to be increasing as well. But that is a discussion for economics and policymakers. What we are trying to do here is talk about what to do with our money. So inflation is the general increase in goods and services over time, and that makes our cash very, very unsafe. The cash will lose value over time. So you have to put your money to work so that you can get a rate of return. A rate of return is what you get on the money that you invest outside. Maybe you buy a stock or you buy a bond. Whatever you do with your money, you want to get something on top of it. Let's say you have £100, for example, and you invest in something and you get £110. That £10 on top, that is your return. So you want to invest in something where your rate of return at least beats inflation. You know, if it is on the same level with inflation, that means you are not losing any wealth. But if it beats inflation, that means that your wealth is actually growing. So as a young person that is working, one basic principle they used to say spend less than you earn and invest the rest. That rest that you are investing, you want to make sure you are putting it in an asset that is growing over time in such a way that it will beat inflation. So I said there are two ways to make money from an asset. Number one is capital gains. Capital gains in the sense that, let's say I buy a share of Apple, for example, I buy a share of Apple for £100 and the share of Apple becomes £150, you know, after a short while. I'll show you some of the charts later on. And after a short while, Apple becomes £150. That is capital gain. That means that asset that I hold has appreciated over time. If I buy a house, for example, I buy that house, I bought the house £100,000, and let's say in 2-3 years, that house becomes £120,000. That is capital gains. That is capital gains or appreciation, as you call it in property. And then you also have dividends. Dividends is the money that all these big companies will pay you when you own a stock. So let's say Apple has 100 shareholders, for example, and they are equal shareholders. They all have 10%. I mean, they all have, let's say they have 10 shareholders, just to make an example. They all have 10% of the company. And at the end of the year, Apple makes £1,000 and they decide after all the expenses, because when you look at income statements, you look at top line, bottom line, you know, when they make the money, the revenue, they take out all the expenses. Let's say after they've taken out everything, they are left with, after paying taxes, everything, they are left with £100. And that is the money that they want to share among the shareholders. So when they share that money that they are going to give all of you is the dividend. And then you also have rental income if you own property. What you get from somebody living in that property, paying you rent, that is your rental income. Those are part of the ways that you can make money from an asset. If anyone needs this slide, I'll try and see a way where I can send it to you or put it somewhere where you can download it. That will be something that we can do later on. But like I said, the recording will be on YouTube, so you can part of it as well. So when we look at our life trajectory and finance rules, as I was saying earlier, we spend the early part of our life depending on our parents. They look after us, they clothe us, they do all the things that they need to do. And then as we grow older and we start working, we look after our children. And for a lot of us in Africa, we also chip in some money to look after our parents as well. But there will come a time when we are not economically active, whether it is age. For some people, it might be a situation where it could be illness, because whether we like it or not, these things happen. We pray it doesn't happen to us, but if it does, there's nothing we can do about it. That time when we are not economically active, what are we doing now that will save us financially then? That is something that is very, very critical. We joke around recently that the generation behind us, or they are internet savvy and they, you know, like, it is going to be very, very difficult for us to say we want to bank on somebody to look after us if we have not put something away for that time. And this is why we are having this very, very important discussion. What is our plan towards retirement, towards that time when we are not economically active again? Now that we are working, if you are somebody that keeps budgets, you'll be able to see exactly how much you are spending every month. Now imagine a time where there is zero income coming in from your work. What is the plan that you have for that time? Nobody is coming to save anybody. Nobody is going to give you anything. Nobody, like, there's nobody coming. So it is the plan that you have now that is going to save you as at that time. So if you know that you are already late, let's say you are in your late 30s or you are in your early 40s and you've not started making this plan yet, that means that whatever income that you are earning, if it is 50% that will be going into your pension plan, let it be 50%. That means you cannot go to parties, you cannot do Owambe like your mates. These things are very, very critical, because when I moved here, I started rolling with people. And I saw that the mentality that they have here in terms of pension is very, very different. People have been putting money away since they were like 20. Some people have been paying national insurance for all their life. You know, if you are not doing that kind of thing, you have to sit down and say, what is my plan for that time? Because some of us can be, God can bless us with very, very long life. Imagine if you are 95, 100, and you stop working at 65. That means that you have 35 years of not really earning any income that God has just blessed you with. So you must now decide to say, what do you want to put away for that time? A big challenge for us as Africans, apart from the fact that the general inflation that happens in the market, the big challenge for us as Africans is our currency. Over time, we have seen our currency depreciate very, very much as against the major currencies of the world. One thing that I have noticed has been happening to a lot of older people at home is that Some of them want to buy medication for their ailment, maybe high blood pressure or whatever kind of ailment that they get when they're getting old. The cost of this medication has become very, very high because most of them are imported. And that is because the value of our currency has dropped massively compared to all the major currencies of the world. So this is something that we need to look at as Africans. When you are planning your pension, when you are planning your retirement, you must understand currency exposure in the sense that are your investment going to pay you in local currency, or you could have an investment that will also pay you in US dollars, which happens to be the reserve currency of the world presently. I don't know when that will change. There's a lot of things going on in the big ecosystem, but for now, and as it has been since the end of World War II, the US dollar is the reserve currency of the world. Everybody wants to earn in dollar. Everybody wants to earn return in dollar. Everybody wants to trade in dollar. That is what has been happening. So imagine if you have investment in local assets and you also have investments in international assets. That is something that will be very, very good for you when you are planning your retirement. So thanks to technology, it is now possible for anybody from any part of the world to have a piece of the global economy. Back in the days, let's say like 20, 30 years ago, it was only probably extremely wealthy people that can say they want to own Microsoft shares, or they can say they want to own Apple shares. You need to have a lot of wealth, you need to have a lot of resources, you need to have a lot of connectivity to be able to do that. I mean, even up until, what am I saying? About 2003, 2004, I wanted to send $25 to America, and I had to travel to Cotonou to go and send $25. And why did I have to do that? Because if I go to the bank, there were so many regulations I couldn't get past, and I had to open an account. It was just too complicated to send $25. And Western Union was not leaving Nigeria then. So I had to travel to Cotonou to send $25 to my friend that was studying in America. Then he helped me to pay the application fee. Today, things are very, very different. Technology has really, really come in, and it has made it possible for us to be able to do some amazing things. And part of that is being able to own assets of foreign companies. So people ask me, how can I own Apple shares? How can I own? I will explain everything before we leave today. And one important thing I also want to mention, there are a lot of us that have moved here to the UK. You know, in the last few years, I've been dealing with so many people. I mean, I've been in touch with so many of our brothers and sisters that have moved here to the UK. Some of them are in their 30s, some of them are in their 40s, some of them moved with their family. It is important to understand what is going to happen to you in terms of retirement. Are you going to move to a country that is cheaper? Is that your plan? You know, or what exactly do you want to do? Because number one, if you don't pay presently, state pension in the UK is around £220 per week that the government will give you. But for you to get the full state pension, you must have paid national insurance for 35 years. So if you have not paid national insurance for 35 years, you are not eligible to full state pension. If you have to pay for 10 years at least for you to even get any amount, you know. So that gap is very, very big. If you have not done that, I remember there was a time where you can actually buy those years. If you call HMRC, they can tell you how much you need to buy a year of national insurance, and then you'll be able to get that 35 years if that is what you are interested in. But if you work out your age and you work out the retirement age and you look in between and it is not up to 35, then you have to know what you want to do, because you will not be able to get the full state pension. And that brings us to this kind of discussion that we are having. Because whether like look at my beard, I'm just 39 and everything is all getting white. I'm just scared, like what is going on here? We are all getting older than expected. So start working on that national insurance. That is very, very important. So the beauty of equities is that there's something they call compound interest. There's something they call compounding. And compound interest, Albert Einstein called it the eighth wonder of the world. Like, he who understands it, earn it. He who does not understand it will pay it. You know, if you put some money in an account, you know, for at a certain rate of return, and just leave it over time and watch how it will swell up. I'll show some examples in a bit. So one of the earliest rules of finance, as I said earlier, is spend less than you earn and invest the rest. If you can put your money to work at a good rate of return, you just need to go and sleep. You know, you just really, really need to go and sleep. I'll stop sharing this screen now and I'll show you some examples of the things that I am talking about. Okay, so let me bring up the Explorer. Right, okay. Let's see what is going on here. I'll try and make sure this Zoom is, we make it more people so that we can bring more people in next time. I don't like the fact that some people may not be able to to join in. Okay. If you're on Zoom, can you still see my screen?
Yes, sir.
Yes.
Yeah. Okay, thank you so much. Thank you. So what I did now, I went into trading 212. I just wanted to show you how equities work, you know, how equities work in general. So this is Meta. Meta is a company that Facebook, basically, and Facebook owns Facebook. I mean, Meta owns Facebook, Meta owns WhatsApp, and Meta owns Instagram, and they also own Thread. They are also building lots of things that Meta is doing. About 2 billion people use Meta every day. If you are not using WhatsApp, you're using Facebook. If you're not using Facebook, you're using something in that area every day. About 2 billion people. Now, if you are a shareholder of Meta, if you own Meta stock, what happens is that if you buy a stock of Meta, you are part of the owners. When I bought their shares, they used to send me annual general meeting stuff. They will say they want to vote. Every year they send me all those documents. And you are a part owner of the company. Now, let me give you an example. If you can see this chart now, you can see the dates as they are on the chart. You can see that even as at 2020, if you bought Meta shares in 2020, you can see the date on top. That is 23rd of March, 2020, right? If you bought Meta shares in 23rd of March, 2020, you will be paying $166 for one Meta shares. $166. But if you look at Meta shares today, Meta shares is selling for $478. In just around, when was that? 2020. In just around 4 years, you've kind of like times 2, times 3 your money in US dollars. That is Meta. I'm just talking about Meta alone. So what happens when you own a share of a public company? You own a share of a public company, Apple, Meta, Google, all of these companies, Microsoft, you can see Microsoft working with OpenAI, things are happening. All of these companies, they are not just local companies. They are not like companies that operate in your country alone. They are companies that operate all over the world. So that means the revenue is coming from all over the world. When they pay their tax, when they pay their employers, when they pay everything, I mean, their employees, when they pay taxes, they get a net profit. If you look at the net profit that these companies make, after making their net profit, sometimes they put the money into research and development, and sometimes they pay that money out to investors as dividends. One good thing about owning stocks as well is that apart from the dividend you get from the company, if your company is doing well, a lot of people will want to own the shares of that company. And if people want to own the shares of that company, the price will go up, which is normal demand and supply equation, isn't it? So you can see that is just Meta, for example. Even if you bought Meta, when Meta fell to, what date is that? 2022. October 24, 2022, Meta shares fell to $99. And you can imagine if you bought it at that time, you'll be on 400 and something dollars. That's like 4x your money in like from 2022 to 2024. That's even 2 years. But one thing I want you to look at is that don't even look at it falling down or going up. I want you to look at it over time. Like if you put a line, let me see, can I get a trend line there? I'm not sure you can give me a trend line. If I have a big chart, I could give you a trend line. If you put a line on it over time, from here, you will see that even if it is going up, you are buying. If it is going down, you are buying. You see that the line is going up over time. And that is what I want you to understand about equities. Sometimes it will come down, sometimes it will go up, but over time, if you leave it for a long time, you will be wealthy. That is where compound interest will work for you. And that is why one of the first principles of investing in equity is to make sure that you have an emergency fund. You don't want to go and be selling your shares when you have a flat tire. Whatever your expenses are, 2 to 3 months of your expenses, make sure it is saved up somewhere as emergency. Pay high interest debt. Make sure you don't have high interest debt, and now start investing in equities. That is just Meta that I've shown you. And these are companies that you know. These are companies you know all the time. You know, please, could we mute our mics, please? These are companies that you know. These are companies that you use every day. That is Meta, for example. Let me look for another one. Let's say Apple. This is an example I use all the time. So that is Apple. Look at Apple, for example. If you owned Apple shares from January 2019, January 2019, Apple was selling for $37 per share. What is Apple selling for now? Apple is selling for $189 per share. This is non-magic. You can go and check it yourself. And this is the beauty of owning equities. And like I said, if you look at that chart, I've put it on the maximum. Look at it from January 2015, when it was selling for $27, and look at it now, it's selling for $189. Look at the chart, as I said again, it is going up that way. Let's check another one. Microsoft. These are companies that you hear about, you use them. Microsoft. Okay. Look at Microsoft as well. Pick a random date back in time, June 2019. 3rd of June 2019, Microsoft shares was selling for how much? Was selling for $132. And what is it selling for today? $430. How have we missed out on this wealth creating machine? I don't know. But what I want you to take away from this discussion is to make sure that you are going to go and do some work on it. You're going to go and do some research on it, and you are going to make sure that you are no longer left behind. Like I said, this webinar, we are not selling you anything. I'm not here to sell you anything. I'm here to wake you up so that you can go and do work yourself. So, but there is a risk in investing in equity. There is a risk in investing in anything, as I said earlier. One risk that is in equity is that stocks can go up, stocks can go down over time. Don't look at this money, oh, this 50,000 pounds is not my own, oh. It is a practice account that we are, so I'm not the owner of the 50,000. So let me just make that clear. So one risk that is in equity is that stocks can go up, stocks can go down, depending on whatever is happening. If they find fraud, let's say, for example, they find fraud in a company that you invest in, the stock can tank. And if you bought the stock at $100 and the stock go down to $20, that is a loss for you. How do you now kind of cover yourself from those kind of losses? That is why people invest in what we called the S&P 500. Can you still see my screen with the charts? I just want to be sure.
Yeah. Yes, I can. Yes, I can see your screen.
Okay, thank you. Thank you. So that is why most people invest in what we call a broad market index fund. An index fund is like what we call the Premier League. I'm going to use the S&P 500 as an example. The S&P 500 is just about the top 500 companies in the US. They just finished playing the Premier League recently. And we can see that some team got relegated. 3 teams got relegated and 3 teams will come back to the top, right? So that is how the S&P 500 works. From time to time, some companies will fall off that list. Some companies will come onto that list. You are going to be, once you buy a portion of the S&P 500, you are buying a portion in all of those companies, right? You are buying a portion. If I go on Google now, and I'm sure you can see my screen. If I go on Google now and I say S&P 500 components, S&P 500 companies, that's an example. So look at this now, and you can see the companies that are in S&P 500. Just have a look at them. You can see all the companies that have S&P 500. You can see Microsoft, Apple, NVIDIA. NVIDIA just, if I go on this chart now and I show you what happened to NVIDIA in the last couple of months, you'll be sure. Look at NVIDIA. See what happened to NVIDIA. If you own NVIDIA in 2022, you are buying NVIDIA for $112 per share. Look at NVIDIA today. NVIDIA is over $1,000 per share. That's 10x your money. It's one of the stocks that has just blown up in the last few months. So that is what I'm saying. So when you invest in S&P 500, you are not only investing in one company, you are also investing in all of these companies. Look at the companies that are in S&P 500. You can see all of them. Uber is there, starting from the top. Microsoft, Apple, NVIDIA, Amazon, Meta, Alphabet, that's Google, Class A, Berkshire Hathaway, JP Morgan, ExxonMobil, Tesla, Visa, Johnson & Johnson, Costco, all of those companies. Netflix is there as well. Chevron is there, Salesforce, Bank of America, PepsiCo, Coca-Cola. So if you buy one piece of S&P 500, you are buying a piece of all of that. And that reduces your risk. You know, instead of owning, if you're on TikTok, you'll not be able to see my screen, but the video will be available. I'll make the video available. Thank you so much. I'll make the video available. And next time we are doing this, I'll make sure I buy the bigger package so that I can bring as many people as possible into the Zoom. I wasn't too sure of what the turnout would be. So I deeply, deeply, deeply apologize for that. Okay, so you are investing in all of these companies at the same time when you invest in the S&P 500. So you now want to know what return can I get when I invest in the S&P 500? You now go and check. Right? Google is always my best friend. You know, what are historic S&P 500 return? Okay. Average return. Now look at that. That's Investopedia, right? He said the S&P 500, where is it? I saw it just now. The S&P 500 average annualized return since adopting 500 stocks in 1957 is 10.26%. That means averagely over time, the S&P 500 has delivered 10.2% per annum, averagely. So if you take it from 1957 up until December 2023, it has delivered 10.2%. Is that not very interesting? Some people might think, what does 10.2% do for me? How do I know what 10.2% can do for me? I'll give you another small bit that you use to check. So we call it the compound interest calculator. So when we go into the compound interest calculator, it gives us an idea of what our investments can do for us. Okay. So let's say, for example, now I'll just use pounds because I'm in the UK. Let's say, for example, my initial investment initial money that I put away, let's say I put £500 away, right? £500 away. And we are looking at 10.2% every year. 10.2% every year. Or even if we say it is 9%, let us be conservative. And we say it's 9%. And I'm saving towards my retirement, right? I want to put some money away for my retirement. And I say, I want to put it for 20 years, okay? My initial investment, as I said, is £500. I started with £500. And additional contributions. Let's say my additional contributions, I decide to put away £300 every month away, every month, £300 every month. That will equate to £3,600 every year, right? I am religious about it. I am putting it away every month, invested in the S&P 500. So additional contributions, I would say annually, 3,600 annually, every year. That's what I'm doing. I am not doing anything else. So currency is pounds. Initial investment is £500. Rate per year is 9%, and I'm putting it away for 20 years. My deposits is 3,600 every year. And what point am I doing it? I'm doing it at the end. I hope we are following me on Zoom and you are getting what I'm saying.
Yes, sir.
Yes, we are.
Okay, thank you so much. So I put it at the end and I say the compounded interval is annually, because it is every year that this rate is working. So I'll say calculate. So you can see what is going on here now. My 3,600 that I put away every year, it is now worth £186,000, 978, 978. That is what my future investment is. If you look at how much money I put in myself, how much money did I put in myself? That is 500 plus 363636. The total amount of money I put in myself is just £72,000. And my accrued return is £114,000. So the return that I got for religiously putting my money away every month in an asset like the S&P 500, the return I got is almost, it is not even almost, it is like twice the amount of money I put in. And why is that happening? Because I am doing it. I am not changing anything. I am not looking for any magic formula. I am not like looking for the new shiny object. Someone was saying an analogy these days. He said, your money is like a soap. The more you are tampering with it, the more it is going to lose value. So what you want to do is to find an asset that is reasonable and just be doing what you are doing religiously every month. If you are doing it for your child, you are doing it for yourself, you are doing it, just be doing it religiously every month. Was it Warren Buffett that has this quote that said, the stock market is a market that takes money away from the impatient and it gives it to the one that is patient. So if you are patient, you are going to enjoy. I remember when I was talking about Meta, I think it was about 2 years ago, I was talking about Meta online. And someone said, Meta has just gone to $99. I was just laughing because for me, I understood equities. I knew how equity worked. Meta is a huge company. 2 billion people using you every day. They will figure out their marketing plan. They will figure out how to make money. And I'm always following the earnings call and everything. And then Meta is now 400 and something. I've not heard from that person again. No. He did not say anything. He has just gone quiet. So these are the things that we need to start focusing our attention on. Please, if you're on Twitter or you're on TikTok, the video recording will be available and I'll put it on my YouTube and then you can watch it. I'm sorry, we could only take 100 people into the Zoom call. So now, let me now give you an example. I used to talk about Norway because Norway is a company. Norway as a country is a country that they invest a lot for their future generation. Look at how much Norway has invested for their future generation. That is, this Norwegian krona is over 1 trillion US dollars that they have invested for their future generation. Listen to what they say. The aim of this fund is to ensure the long-term management of the revenue of Norway's oil and gas resources. They are investing that fund for their future generation. Look, the fund has a small stake in 9,000 companies worldwide, like Apple, Nestle, Microsoft, Samsung. You can imagine that. So if you are also investing in S&P 500, this is what you are investing in. You are investing with the big dogs. You are investing with the big investment companies of the world. And that is what you should have at the back of your mind. And you start putting that money away religiously. You know, like you have to take this thing very, very serious. So that is what the Norwegian pension fund is doing. I'll give you another company called the Qatari Investment Authority. Qatar as well, they have their own fund that they are using to invest in different assets all over the world. They bought Harrods. You see now, if you put it there, who bought Harrods? You see, Qatar Holdings bought Harrods from El Fayed. They bought it for about, I can't even remember. So maybe about 10 billion pounds. I forgot how much they bought it from the El Fayed family. They also bought PSG. I'm sure you are aware about that. So they are also investing their money for future generations. If you are from a country like ours that nobody is investing for us, you've got to look after yourself. And that is the reason we are doing it. You've got to have a plan for yourself. Very, very, very important. There is also one website that I want to do. These are some like very like if you are not in the investing world, you will not know about these websites that I'm showing you. Dataroma. See, this Dataroma will show you what the big investors in the world are investing in. Have a look. You can see these are big investors around the world. Bill Ackman, Berkshire Hathaway, Berkshire Square Management Company is an look at his shares portfolio. That's about 10 billion US dollars. Carl Icahn, those are top investors from all over the world. If you just have a sneak, Bill and Melinda Gates Foundation Trust, just have a sneak into the shares that they owed, and you see that, see, they own Microsoft. What is wrong with this TikTok? Why are you doing this?
It's a question.
I'm talking to my people. Okay, yeah. You can see now, they own Microsoft, they own Berkshire Hathaway, they own FedEx, they own UPS. Those are, you can see that all these people, they are not sleeping. They are investing money for their future and future generations. You see, that is why we have to take these things very, very, very seriously. You can see they own stocks. They own like 5 million pieces of stock that is worth about 1 trillion US dollars. If you are not doing that for yourself, you don't have big money, but make sure a percentage of your earnings, you are directing it towards investment. I think we've covered a little bit there, and I'm sure you've kind of understood exactly what I am talking about. Somebody said I should help you to check Dangote. Dangote is a stock that trades on the Nigerian Stock Exchange. Dangote does not, I don't think Dangote trades on the New York Stock Exchange at all. So Dangote is a Nigerian stock. So you have to understand that. You have to understand that bit. I don't know if you are trying to joke, but we are not talking about, I mean, there's nothing bad in having Dangote as a local asset. But as we said, you want to diversify and have something international as well. So I'll stop sharing this, and I will be back on the slide. Okay, so we have talked about yes. So we've talked about all the examples of owning shares. We've talked about how the compound interest calculator works. You can now imagine if you increase how much money that you are putting away every month. You can imagine what can happen to your asset and your portfolio. Right. So be intentional about your money. Be intentional about your financial future. You have to go and ask that question. Please, can we mute on Zoom, please? So be intentional about your financial future. One of the first things you have to do is to make sure you actually know what your retirement figure is. What do you want your retirement figure to be? You have to plan that in advance. You have to think about it. Okay, how much do I need for retirement? And that brings me to what they call the 4% rule. The people that do FIRE that I mentioned earlier, financial independence, retire early, they have something that they call nest egg. Okay, nest egg is that you want to know what your retirement figure is. What they now do with the nest egg is that, let's say annually, everything you spend annually is $10,000. Let's say that is your annual expenses. What they now do is that they multiply that $10,000 by 25. You see, if you multiply $10,000 by 25, what would you get? You probably get $10,000 by 25. You get like, say, is that 2.5 million or 250,000? $10,000 by 5, 50,000. You get 250,000. So if you now get $250,000, you've saved that in your nest egg, maybe over your working time or over your investment. Your investment is now worth $250,000. They will now invest the whole of that money in something like the S&P 500. And they know that the S&P 500 is going to give them averagely 8% every year. So if S&P 500 is giving them 8% every year, and they only need 4% as their living expenses, you can see that their living expenses for the year is already covered. So they don't actually need to go out and work to make money. That is one thing you need to understand. You can Google it, you can watch a lot of videos on what the 4% rule is. And that gives you an idea, how much money do I actually need to save away in my pension? Number one. Number two, ask your workplace about your pension contribution. Some of us are working with NHS and all of that. Go and ask what exactly is in your contract, or check your employment contract to know what is in your pension plan. Understand the companies that are managing it. You want to know which company is managing the pension that I'm putting away in my workplace. Have an idea. Know what they do. Know how they diversify their funds. Know what they are investing in. Should you stay in that pension, or you need to do what they call the SIPP on the side? And the SIPP is the personal pension that you design for yourself. You can have your pension at work. You can have the SIPP. All those kind of things, you need to discuss it with your employer, and you also discuss it with a certified financial expert. Like I said, I'm not a financial expert. I'm just sharing with you what I found out, like brother, like sister. So that is a job that you have to do. Also, is your company matching your pension contributions? There are some companies that will match your pension contributions. Have a check. Have an idea. Don't just leave it to chance. Be very, very intentional about what you are doing. So I'll talk about what we have in the UK. Like I said, I've mentioned about SIPP before, which is your self pension, the one that you can do for yourself. There's also one for your work as well, which you need to check. And there's something in the UK called ISA. And ISA is, I think, is individual savings account. The government of the UK, they allow you to invest £20,000 every year. And that £20,000, whatever you invest it in, any return you get is free from the tax man. It is tax-free. You don't need to pay any tax on the investment. Imagine if you are able to, it's very difficult, but just imagine if you are able to max out £20,000 at 8%. and you're able to do that for just 10 years. Just imagine the kind of money. Just put it in that compound interest calculator and see what can happen. And that wealth is protected from the taxman. That is how you have to think about building wealth. And there's also junior ISA as well. With junior ISA, you can open that for your children and start investing for them so that by the time they get to a particular age, they have a bit of nest egg as well. Maybe they want to go into property, maybe they can use it for school fees, they can do all those kind of things. Those are the kind of things we need to start thinking about. I'll give you some examples now, and then you'll be able to see what I'm saying. So we have cash ISAs, we have stock and shares ISA. Stock and shares ISA is the one that if you open a stock and shares ISA with like Vanguard or like Trading 212, you'll be able to buy shares in those accounts. So Vanguard, because Vanguard is very, very cheap, I have read a lot of comparison websites. Vanguard has one of the cheapest fees. Trading 212 as well, they literally charge 0 fees for you to own a stock and shares ISA with them. But Trading 212 does not have junior ISA. It is only on Vanguard that you have junior ISA. All of these things you can do by yourself. I'll give you some shows that you can have a look at it. LISA as well. LISA is mainly for people that want to buy property. You know, you have to be between the age of 18 and 40. If you are buying your first home, that is what you want to use LISA for. It's not for any other thing else other than buying your first house, or you want to use it for as part of your retirement plan. So if you put 4,000 in your LISA every year, the government gives you an extra 1,000, or they give you 20% on it on LISA. Can you still open a LISA account? You can open an ISA account, but LISA, I might just have to check that for you quickly. I believe you still can, but it's something that you can check. Just check on the gov.uk website, and you can use that to get property. The American equivalent of what we are talking about, pensions, 401k. I was speaking to one of our sisters from the US recently, and she told me that it took her a long time before she understood this thing called 401k. And she was so upset that it took her that long to understand, because a lot of employers, they help you match your 401k in the US. Some people match it 100%. You can imagine putting $2,000 in your pension and your company is also adding another $2,000. How can you miss out on those kind of things? So you want to do some research and understand 401k. You also want to do research and understand traditional IRA. You want to do research and understand what is called Roth IRA. These things are very, very critical. Go to a financial advisor, go to a fiduciary, and go and build a financial plan for yourself. S&P 500 is enough. You don't need to do any magic. Just set up an account and do S&P 500 consistently. We've already shown an example of what the results can be. Then there is also this UGMA, UTMA custodial accounts for children, which is just about the equivalent of a child ISA in the UK. And you also have the 529 education savings plan for children as well, just like the child ISA that I mentioned earlier in the UK. In Canada, we have the TFSA, which is the tax-free savings account. You need to do research on that as well. There are a lot of companies that can offer you the TFSA in Canada, and then you can now start buying the S&P 500 from that account. Do research, understand the ones that you want, pick the ones that have very, very low fees, because imagine if somebody is charging you 1% fee, and then the 1% fee is also compounding over time. Those are the kind of things you must pay attention to. Fees eat into your returns. You want to go with the one with the lowest fees. And you are not that kind of person that will be buying and selling, buying and selling, buying and selling. Since you are just investing consistently over a long time, pay attention to fees and just keep investing religiously and without any problems. Okay, African equivalent. There are a lot of companies that have made this available as well for us in Nigeria in Africa and thereabouts. You have Invest Bamboo, you have Cheaper Cash, you have Trove Finance. I'm going to tell you now, I have no affiliation with any of these companies. And I want you to do a lot of due diligence before you start your investing. What I know about them is that they are tech startups that are now in Africa, and they have partners in the US. You know, they have investment houses that they've partnered with in the US. So if you own a stock through them, that money is kept with that investment house. So you are not losing your money. That is what I know about them so far. And a lot of, what do you call it? Venture funding has gone into them over time, which makes sure that they are becoming bigger, they are becoming robust, and you'll be able to invest in S&P 500 to them. So if you go to Invest Bamboo, you sign up with them. Normally, you put money in there, and then you'll be able to buy the S&P 500. And I'm going to give you a head up now. On Invest Bamboo, the S&P 500 ticker is VOO. VOO, that is the S&P 500 ticker. You will see that it's very, very expensive, but you don't need to buy everything. You can buy fractional one. If you have 200 naira or 500 naira, you can buy S&P 500 worth 500 naira, or what one, like you can buy fractional. That's what I'm saying. I don't know the exact amount, but you can buy something fractional. So someone is asking about S&P 500. You can get it on Invest Bamboo. And for religious reasons, some people might want to say they want a specific kind of investment. Let's say you want a halal kind of investment. What you can do is to do research on all of these companies one by one. For example, internet companies. If to say you are okay with Facebook, Amazon, Twitter, or whichever, not Twitter, Twitter is privately owned now. You can do a, you can do an index for yourself. For example, you can do an index for yourself, pick 20 companies that you know, and then split your money on top of it and then invest in them equally. Like I said, that's not financial advice. If you need specific breakdown of halal investing, you can go and see the people that can help you break down and say, this is the companies that they want you to do in, and then build an index where you can be putting money in regularly every month if you are after a specific halal kind of investment. So should that be the end of the slide? Yes. So some of the books that I have read: Psychology of Money by Morgan Housel, A Simple Pathway to Wealth by J.L. Collins, Dando Investor by Monish Pabrai, and then Learn to Earn by Peter Lynch. You can go and get those books, put it in your arsenal, and let's start taking this thing very, very seriously. There's one other thing that I also want to share. I'll stop sharing this now. Okay. Right. Okay. People do ask me, how do I set up Vanguard? The books, Learn to Earn by Peter Lynch, A Simple Pathway to Wealth by J.L. Collins, Psychology of Money by Morgan Housel, and what else? Dando Investor by Monish Pabrai. There's quite a lot of them, but if you read those four, you should be fine. Okay, can you still see my screen on Zoom?
Yes, we can.
Okay, thank you. Thank you very much. Thank you very much. So, okay, so one thing I want to share with you. Can you see the Vanguard bit on Zoom? Like it's a Word document that I'm sharing. Can you see that?
Yeah.
Okay, perfect. No problem. So people ask me, I want to open a Vanguard in the UK. I don't know how to open it. So I just did like a screenshot because I was helping someone to set up their account. And I did like a screenshot of how it looks. So if you go on Vanguard, you'll see Vanguard, vanguard.co.uk, Junior ISA. That's a Junior ISA, for example. Once you get in there, you go to Start My Application. You are new to Vanguard. And then you'll see the general account, the other account at the top, but you want the Junior ISA. and that's the one that you are going to open. So junior ISA, you put the child's, when your child was born, you put that information there, and then you let that go. And then it will now come to your investment choices. When you go to the investment choices, you go to the blend, you see that choose investments, you see the blended funds, the equity funds, you go to the equity funds. And then when you go to the equity funds, you see all of this. You now get to the USA. You see different countries, and then you get to the USA, and then you see the S&P 500. So you see one there that is called the VUSA, and you see one there that is called the VUAG. The VUAG just means that they reinvest your dividends. And then the VUSA means that they pay you the dividends, and then you now reinvest it yourself. So, but since you are going to do it and just leave it there, why not just just do the VUAG and let them do it for you? So if you are starting as a single payment to start, they will ask you for £500. But I think you should do the regular monthly payment of £100. So once you do the regular monthly payment of £100, after the first 2 months, you can go and reduce it to a small amount of money. You can reduce it to £30 or £40, depending on how much you have. And that will be invested regularly for your child. One thing you want to take note of is that if you are doing £30 or £40 every month, sometimes that money will go in the cash section, because your £30 cannot buy a whole VUAG at once. So you have to wait for it to be 2 months, and then you now go in and use that cash to buy it. And then you are now invested in the VUAG. So you want to pay attention to what is in the cash, because sometimes the cash can be accumulating and it has not bought any asset because you are using a smaller amount. So take note of that. So in trading 212 as well, that is for an adult that want to do trading 212. Trading 212, country of residence, United Kingdom. I think there may be some African countries there, so you can check trading 212 if you are outside the UK and you want to check. So when you see trading 212, it will ask you which one do you want. Trading 212 invest, trading 212 shortage, leverage or whatever. You want the ISA. The ISA is what you want, and then it will ask you where do you pay your taxes, United Kingdom, and then you can pick whatever you want. And then it can ask you some small investment questions, just general. It's not hard. It's very, very basic. You should be able. Yes, if you have 3 children, they have to have different ISAs. You can't merge them on one account. They have to have different ISAs. So they ask you some basic information. What is your primary investment goals? Just say investment, long-term capital, appreciation. And then they'll ask your risk tolerance, put medium. How would losing most of your money on invest affect you? And this is the kind of question that they will ask, because they want to know if you are not investing your school fees or investing, they will ask you those kind of questions. Just make sure that you are comfortable. The money you lose is not going to hurt you because you are well prepared. And because if they see that you are a risk, you don't have any investment knowledge, they might say, no. They may not say so, but they will just make it harder. So then you check your investment knowledge and you pick stocks, just general questions. I have some experience mainly through self-managed funds. They will ask you all those kind of questions, and then you'll be able to open the account. So as an adult, if you want to open an account as well, they will ask you, are you doing pension plan? Are you doing stocks and shares ISA, or you're doing general account? You want to open a stocks and shares ISA, and every other thing else is the same as when you are opening for the child. They'll create your login details. They'll help you. Do you need help to choose funds? You can say you don't need help to choose funds. Just go to equity funds and then go and check everything that you want to do. And then you can do monthly payment, or you can do single payment. As I said before, single payment, 500, and monthly payment is 100, but you can always reduce it after some time. And that is that about setting up an account. With people that want to do Invest Bamboo, from what I've checked with people, it is quite very, very straightforward. My sister has one as well, and she's putting a small Naira change in it. And she's also getting some dividends from what she is doing. So like I said, This is a long-term plan. You have to take it seriously. This is our life on the line here. Money is a serious matter. If we don't take it serious, it is going to hurt us. Some people are buying Louis Vuitton shares. Some people are buying Louis Vuitton bag. You have to determine where you want to be. There's nothing bad in owning Louis Vuitton bag, but as a shareholder as well, it is very important to be part of this, to be part of that economy. Let me stop sharing that. Yes, so I think we have covered as much of the information that we want to cover as possible. I hope, we've been here for the last 1.5 hours. I'll take a few questions in the chat sections, and then we'll take it from there. Any questions on Twitter, please put it in the chat. I'll just take a couple more and then we take it. You wear Nike a lot, but I invest in them too. Amazing, amazing. That is the plan. We just want to get serious about these things and start working towards our own financial future. How can you open S&P 500 account? Like I said, you cannot open S&P 500 account. For you to be able to, the S&P 500 is like an asset. For you to be able to access S&P 500, you have to have an account with a platform like Vanguard, like Trading 212, and then you'll be able to get S&P 500 from there. So that is the way to do it. Is there a way LISA can help us reduce tax burden in the UK? ISA will help you reduce tax burden. The reason why ISA will help you reduce tax burden, you cannot even say it's reducing your tax burden as well, because the income that you are putting into an ISA is already taxed. But the good thing is that when you get your return, you are not going to pay tax on it. Because if you sell a house, for example, you have to pay capital gains on the house that you sold, but if you invest in an ISA, you don't pay tax on your returns. That is something that is very, very clear. Yes, to buy your first mortgage, and if your first mortgage is under 450,000, LISA is very, very good to use for that. So just check on the government website and see what is going on. Okay, let me just check the Twitter chat, see what's going on. Yes, I'll try and see how I can get that slide across. Thank you very much. Someone is asking about eToro. Just check in terms of fees. It's the fees that I am worried about. Fees. If you are okay with the fees, then go for it. Some back in the UK have Forex. We are not traders. We are investors. We are long-term investors. We are not buying, selling. We are buying and holding for a long time. That is what we are doing. So there is a very, very big difference between an investor and a trader. It's a different mindset. There's a small thing that I want to show you as well, so that you can have an idea of what we are talking about. I always share these accounts all the time, and I'm sure sorry, if you could mute your mic, please. Just put your questions in the chat. It's easier for us that way. Okay, I'm just going to share this quickly so you can have a look at what I'm talking about. Okay, could you see this on Zoom? Yeah. Okay, so this is an account of a young child. That account is Vanguard. You can see that's a screenshot from Vanguard. They started putting money in that account since March 2020, right? And they started putting the money in the account since March 2020. And you can see that as at, that was the first screenshot from 30th of August 2023. As at that time, it's just 20 pounds, 30 pounds, 40 pounds that they put in the account, and it has accumulated. The total amount that they've put in is 2,540. You can see that. And the returns, you know, S&P 500 that has given them is 470 pounds. And you can see that is the total amount of money that is left there. Imagine if they consistently continue to do this up until when that child is 18. You know, they should not have to suffer the way we suffer. Those are the kind of things that we need to start thinking about. And that is August 2023. That is the same account up until March 2024, 4 years in total. You can see there now that that same account, total amount contributed is 2,660. You can see between August, they've only added an extra 100 and between August, yeah, they've only added, let's say, 120 pounds. You can see that 660, and the investment has grown. The return is already 790 pounds, and that's the total, 3,450. And how much was it before? Some months back, 3,010. So the stock market rewards you over a long time. Don't worry about it. Do it consistently. Do it over time. You know, and that is just the secret of it. There is no magic formula anywhere. There is no secret anywhere. Just be consistent. Don't go and follow, get 50% in next month, all those kind of things. You are playing with your money. Be consistent, do it a long time, see a financial advisor, and just sit back and relax. One last thing I'll show you. Let me see. Warren Buffett, S&P 500 bet, S&P 500 bet. In 2008, Warren Buffett, who is the wealthiest investor of modern time, he said that hedge funds, these are companies that trade billions of dollars every year, that S&P 500 is going to beat a group of hedge funds in terms of return. And these are people that trade money for like, that invest money for like Roger Federer, all of those big wealthy people, musicians and all of that. Would you believe that none of those big hedge funds beat S&P 500? None of them. And Warren Buffett won that bet that they will give that money to charity. You know, so investing in S&P 500 over a long time is just the best way for you, because you are not going to incur any cost. You know, very, very low cost you are going to incur. You are not going to be trading up and down. You're just going to be doing your work, focus on your work, focus on doing your side hustle, focus on making your life better, and just leave it. Those hedge funds did not beat the index. So why do you want to worry yourself and say, I want to buy this one today, I want to buy that one tomorrow, I want to buy this tomorrow? You know, it's not worth it. Just do your work, find a job that you can do, be excited about your work, do your work very well, and then just do the index and then forget about it. I think that is about it for now. I will take some questions. If you invest a long time, like 20 years, will I be able to catch out the whole fund? You can take out your whole fund as soon as you want it, even if you invest it for 20 years. That's the thing about ISAs. You can withdraw your money at any time. Nobody will hold you for it. S&P 500 returns are not taxed if you invest through a stocks and shares ISA. Is there any way to make someone beneficiary in case? Oh, definitely. That is why you need to do, you need to write a will, right? You need to write a will to put all your assets on one spot And then when you pass away, somebody else can be the beneficiary. Okay, thank you so much to everyone that has joined in. I hope you have enjoyed the session. I think we were able to keep all the 90 people, I mean, all the 100 people that were here over time. We'll do this again, and this time I'll you write a will. You write a will if you can. Write it now. Write it now, or if you can, please. My YouTube channel is just my name. I'll try and put it on the link on YouTube. Let me see. I'll put it in the chat link. It's just my name. Once you put my name on it, you will be able to get my my YouTube channel. I'll put it in the chat section, and I'll upload the video on it as soon as it is ready. Like I said, seek investment advice, read good books, see an advisor. All what I've shared to you is not investment advice. It's something that I've done over the years, researched by myself. I even wrote CFA level 1 for you to know how serious I'm about this thing. I wrote CFA level 1. I think the books are still here. Yeah. That's some of the books. I wrote CFA level 1 just to make sure that I understand what I am doing and I don't mess things up, you know, because I just wanted to know. I just wanted to know what's going on the money world. And yeah, so let's get going. Let's keep developing. Let's keep growing. We'll do this some other time, and I'll try and make sure that I pay for a more bigger space so that we can share more knowledge. I'm not sure if my people on Twitter have some questions. Okay, the last question came in 10 minutes ago. Oh, my brother, the Zoom session was just 100 people. I will make sure next time, I'll make sure because it just costs money. I didn't know that it cost that much. I think it was 14 pounds if I wanted to do 100 people. And then if I wanted to make it bigger, I need to pay like 40 pounds a month. I was like, 40 pounds a month. You know, I'm not charging anybody for this session. Why should I? Can you do the same with Moneybox? I'm not sure if Moneybox has stock and shares ISA. Have a look and check just to make sure. But the reason I'm with Vanguard is because of fees. Like I said, Vanguard has very, very low fees. Someone said, would you advise Lloyds Bank Investment ISA to trade 212 and Vanguard? Like I said, fees is what I am worried about. Vanguard has the lowest fees in the marketplace, one of the lowest, if not the lowest in the marketplace. And I don't have any affiliation with any of these companies that I'm telling you. If I do, I'll let you know, honestly. Vanguard has very, very low fees. And I'm not sure if you're able to do it yourself, like DIY with Lloyds Bank. So that it may be very, very different. Okay, the video will be uploaded on YouTube, and then you'll be able to have a catch on it. Yeah, I think we have done really well. 1.5 hours of us sharing knowledge, sharing information, and I hope you've benefited from it. My people on Twitter will be back again very soon. Thank you so much to everyone that has joined in. I didn't get some water to the side, but I didn't want to leave you and go and get water. You see, I didn't prepare well enough. So my throat is dry now. But thank you to everybody. It's been an absolute pleasure. YouTube handle, just put my name on YouTube. I'll find a way to get it on. I can't put it on TikTok now because I'm just scrolling through. So thank you to everybody. We'll do this again. You know, whatever you are doing, let me know. And there is one, okay, there is something that I could actually add. But let's keep in touch. Let's keep following each other. I have a small group, a small Telegram group that I'm trying to put in as much finance information as possible. I'll share the link whenever I can. It's just so busy that I may not be able to put in as much as I can, but somebody is supporting me there as well. one of our brothers is also supporting me. But we will keep supporting each other. We'll keep doing this from time to time, you know, push ourselves to the next level, because there's no point in us working hard for all these years and then you don't have a financial cushion. You know, if you are not in real estate, you want to be in equities. If you're not in equities, you want to hold, you want to hold something, so that when we get to that stage where we are not able to work again, we have something very, very good to fall back on. Thank you so much to everybody. Thank you to wow. Even on Twitter, we had about 300 people. Thank you so much. Let's have a wonderful weekend, and we'll do this again soon, very, very soon. I am really, really grateful, and I appreciate your presence. Thank you. Bye for now.